Welcome to TheoTrade. This is Don Kaufman. It's May 30th, 2018. You are watching the Theo Night video. First, allow me to begin with the similar idea from a few weeks back, and that has to do with redefining what we know as volatility. Now, many of you may look at something like the VIX and say, the VIX is down in that 15 region. I'll even highlight it up here for you. And as long as that VIX is down there in the 15 region, what does the VIX have to do with anything right now? You right? You got to stop for just a second. You got to look at the SPX. So the SPX, okay, this week depicted about a $33 expected move. That means, okay, throughout the course of the week, and remember, this is a shortened week, right? Holiday week, it's Memorial Day, so we were looking for a $33 move higher or a $33 move lower. Well, yesterday, markets open, we got it. All right, we had a move that was beyond 40 points, then we bounced right back inside of what was expected. Now we've actually ripped right back to effectively where we started the entire week. Okay, go figure. So those of you that kind of define like, the volatility is dead out there, okay, quite the contrary. Just because the options market isn't necessarily depicting an extreme level of volatility doesn't mean that there isn't necessarily volatility. And I'll continue to reiterate this particular point is that, so the VIX looks a little low and the market's kind of moving. So what does that mean? What it translates into is opportunity, right? The options marketplace is not pricing in some of these big moves. And this is something I've just mentioned day in and day out. It's not pricing in like, oh yeah, I saw a $33 move coming today. Nobody saw like a $30+ move coming today. Right? And when I say nobody, listen, that was not priced into the market. And if you don't believe it, go look at the market. When I say go look at the marketplace, you can go into, and this is specific to thinkorswim, but anybody can get this, technology. You can go in here and you look and say, what did the options market believe we were going to move yesterday? Okay? Right? And this, when I say yesterday, this is yesterday at the close. So here we are on May 29th, and we were looking at maybe about a $19 expected move. Where does that say, what, $34? Because the SPX moved $34. I mean, we're right on the cusp, if you will, of almost a 2 standard deviation move. That's 2 times what's expected. And the reason that this matters is that if you look at the price of the options, it doesn't matter whether it's calls or puts. And I was making this exact point last week. If you bought calls, okay, listen, they were trading for $10. And those were the 69.90s. Where did we end the day? 27.24. That a big enough move for you? Okay, it's explosive. This is where, you're afforded the ability to risk, for instance, 10 to be able to make 20 or risk 10 to be able to even make 30. How often do you get put in that position? And I'll argue the fact that you don't even necessarily be right, in effect, to be able to make money. All right, and that's with buying options. And I don't see, the problem is everybody kind of gets into this, I need to sell, I need to sell. There is a time and there is a place to sell options. Right now, it is neither the time nor the place to be an options premium seller when the volatility is effectively low versus some of the moves that we're seeing on a day-to-day basis. Speaking of the moves, let's get into levels and be specific about some of those levels. So here we go into a 30-day 1 hour. Now, the levels that are depicted on the screen, these are what we now call gravity points. Right? I'll kind of highlight some of the gravity points. The one that we closed just below, all right, that's 27.31. This little monkey right here is 26.82. And again, I don't mind kind of rewriting these up here because on a day-to-day basis, everybody has tendency to forget. This is 26.82 up here, 27.31. The most recent bounce, if you will, was down to the 26.82. We stopped there on a dime, exceeded it mildly before ripping back up. Now today, I have to tell you, I'm a little shocked myself that we came that close, 27.29. Close enough for you? Okay. So again, redefining what we know as volatility. Now, let's go back to the idea of volatility for just a second, because therein lies some opportunity. And I'm kind of zooming in once again to the SPX to give you a heads up that we traded outside the expected move. We've come now inside of the expected move, and we're pretty much right back where we were last Friday. Now, zooming back out for just a moment, I'm going to close up this left side bar. I want to come up to studies, and I want to show you something interesting on the studies. Go under Add Study, go into Volatility Studies, and go to Historical Volatility. Okay. Now, take Historical Volatility. We're going to right-click on it and go Edit it, and we're going to knock it down, all right, to 5-day window. what this effectively does is just averaging historical volatility, or it's averaging actual stock price movement over the last 5 days. I think you find this interesting because as I say, like, hey, you need to kind of redefine what you think is volatility. We're right back up there. And when I say we're right back up there, you know, in some previous weeks of trade, I'm going to turn off the expected moves for just a moment to give you a cleaner look at the chart here. In some of the more recent weeks, when we really started to see bouts of volatility, yeah, we're right on the cusp of just that. So before you take off your helmet and say, yesterday was a little bit of a one-off, well, again, the historical volatility, which is what actual price movement, is screaming the opposite. Historical volatility at this point in time is literally on the upswing. So we might expect even more movement in the marketplace than we've had, again, since all the way back effectively in mid-April. And I want to throw that out there because, you know, again, the last 3 weeks of trade, we're like, it's getting a little bit quiet. Well, guess what? Quiet is done. We're in an upswing right now in terms of historical volatility. Let's look at the broader market a little bit. So we talked about volatility for a moment. I still think that the volatility itself, the implied volatility, is incredibly low versus some of the moves that we're actually seeing in the marketplace. Again, and therein lies some opportunity to be on the buy side of options. I also want to take a quick glance at the financials, and you should as well. If you take a look at the financials right now are getting none other than what I would have to call intense. And when I say intense, you know, the financials themselves look at the historical volatility. Again, forget about implied volatility for a second. The financials right now, historical volatility is as high as it was, again, when markets were really rocking out there. And I just want to point that out, that, again, from a financial perspective, the financials themselves are in the midst of a much larger bout of volatility. And that's something, until this quiets down, this is something that needs to keep you on the edge of your seat. If you need to hedge off some positions, hedge them off. Okay, it's just a warning shot being fired across the bow. One of the points that I made this past weekend was that everything was moving around the market except the market itself. Okay, well, guess what? Now in the last 2 days, now you got some market movement. Now you're starting to actually believe, like, hey, that actually makes sense. And what I was talking about this weekend is everything from the bond market. Could you get more movement in bonds? Absolutely not. The bonds are on fire. They've been on fire to the downside. They turned around, exploded back to the upside over here. It's wreaking havoc in markets all over the place. Even the bond volatility is starting to pick up quite a bit. So you've got bond markets moving huge. You've got the dollar, which has had explosive moves effectively to the upside. There's a reversal in the dollar today. Now, is the dollar reversed? Okay, which leads me to the emerging markets. Now, this was the object of my affection, okay, in the weekend video. What I was looking for inside of the emerging markets was a bounce back to the upside. Why the bounce? Because we expected the dollar to reverse. The dollar has now reversed. Okay, we expect a bit of a follow through and a bounce in the emerging markets. As such, I am trading in the emerging markets. Here's a position that I have just placed effectively today. What I did is I purchased a 47 call spread, a 47 call spread for the next 30 days. It's just an in-out spread you pay right around $1 for. Okay, why? I'm looking for, again, a short-term burst back to the upside, and we'll achieve excellent profitability. And allow me to zoom out on this particular trade for just a moment, but close that out. We'll assume that we'll have excellent profitability on this particular spread with a bounce, okay, even shy of the 47 level. Again, even shy of the 47 level, we'll have full profitability for our particular spread over here, even though I am short the 47 calls. Again, this is a bullish spread in the emerging markets for the next 30 days. However, I'm looking for a fairly violent and short-term bounce. Why? Because, again, we're going to get a bit of a reversal, possibly back in the dollar. Bonds cooled off in the next couple of days. However, broader market volatility right now looks to be on the verge of picking up once again. Even though that we're going into summer and we're coming into a holiday week, you still have to suspect, first of all, the markets, they're paying attention to only minuscule portions of news and information coming out. Case in point, yesterday we had news about, again, Italy. Markets absolutely tank on it. Today, what was the positive news? Okay, what was positive news that rebounded markets today? In fact, there happened to be, again, negative news because it looks like the trade war is back on with China. This is a catalyst-driven marketplace that's just pinging between levels over here. As this week progresses, we're still expecting some fairly large announcements, to ultimately break. One thing you want to keep in perspective, the week is still expecting, an additional $22 of movement. Nevertheless, keep in perspective, right? $22. We moved 34 today. Expect still some fairly vast moves as this week progresses. Look to execute into the emerging markets, for a short-term bullish trade, and we'll go from there. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.